Hi, this is James with the Greenville Financial Empowerment Center and the Greenville County Library System, here to talk to you today about insurance basics. Now, there are several types of insurance, but I want to talk about the main types. Property and casualty, which is like auto, homeowners, and renters, and life and health, which is long and short-term disability, health insurance, and life insurance. Insurance is one of those things that everybody has, but not many folks really know a lot about. And a little bit of knowledge on this goes a long way, because it's something that, while you're not guaranteed to use, if you do ever use it, it's helpful to know about. So let's talk about the basics of auto insurance, the type of insurance that almost everybody has. If you have a car, you have auto insurance. We really, really hope. So the primary coverage on auto insurance is liability. So that's between bodily injury and property damage. Now, liability is damage that you are responsible for. So if you were at fault in an accident, if you caused the accident, or if you took an action that caused the accident, it's what you are legally liable to pay the person who was damaged or injured. Now, there's bodily injury and property damage. Bodily injury covers injuries to the other person, like physical injuries or mental injuries if there's pain and suffering. Now, the state minimum for bodily injury and property damage in South Carolina is quite low. One thing you want to consider with your liability coverage in general is, what do I have to lose? Also, what do I have in the bank? If you're at fault in an auto accident, the other party breaks their arm, and you only have $25,000 worth of bodily injury coverage. $25,000 in a hospital these days gets, butterfly kisses and a wave from the doctor when they're passing. So when you're looking at bodily injury and property damage liability, you really want to make sure that you have coverage that will actually ensure what the potential to lose. For bodily injury, the state minimum is 25. You're going to want to consider going quite a bit higher than that. Now, property damage is the other individual's vehicles, fences, yards, homes. When you insure for property damage liability, you really want to consider the types of property that you encounter regularly, or that you likely encounter. If you live in a really nice area, you're going to want higher property damage liability, just in case you hit a Mercedes, or just in case you go into a two-story home, right? You want to be very aware of that. Now, there's also MedPay, is how it's referred. It's actual medical payments. MedPay coverage covers you and individuals in your vehicle regardless of fault. So if you're at fault for an accident, this is what would pay for you and the people in your vehicle. Most policies have it included at $1,000 at the lowest. That's not a lot, especially for the types of injuries you see in auto accidents. If you have higher options for MedPay coverage, that's something that you want. Now, another thing with MedPay, you're generally entitled to access it in the event of an accident, whether you're at fault or not. So if another party hits you and they are at fault, and you do have to go to the hospital, you're going to want to contact your insurance company too, to see if you have MedPay coverage that can help you pay for your bills, in addition to their liability. That's a lot of coverage that a lot of people miss. Now, what I also want to talk about is the full coverage myth. A lot of people say, "No, I'm good. I got full coverage." There's no legal definition for full coverage. Full coverage is really a sales point for many companies. To really be fully covered, you want to make sure that you are covered, your medical bills, people in your vehicle's medical bills. You want to make sure that your liability is covered, so that you have enough liability coverage so that in the event of an accident, you don't worry about losing your retirement or your home in a lawsuit. And you want to make sure that if there is damage to your vehicle, comprehensive or collision coverage is available to either repair or replace your vehicle depending on its valuation. Now, with those, you want to start talking about deductibles. The deductible is what you have to pay out of pocket in the event of an accident. So if you have a $1,000 deductible and there's a wreck, the damage has to exceed $1,000 before the coverage kicks in to pay. Now, with deductibles, there are high deductibles and there are low deductibles. The higher your deductible, the lower your premium. The lower your deductible, the higher your premium. The premium is what you pay to the insurance company every month or every renewal period, depending on how you handle that. So those are things to be aware of. Bodily injury and property damage are what you are at fault for. Medical payment or medical payments for you and members of your vehicle. And full coverage is a myth. You want to clarify how it protects your vehicle with your insurance agent. Now, there's also renter's insurance. Renter's insurance has a MedPay provision in it. MedPay works exactly like it does on auto insurance, except for it doesn't apply to you or members of your immediate household. There's also a liability coverage provision in renter's coverage, which provides you liability for things that you're at fault for in or around your household. If you have a renter's policy, you most likely have liability coverage on it. I also think that's something that a lot of people want to go high on. Now, one thing that a lot of folks misunderstand with their renter's policy is that there are limits of coverage. There are limits on electronics. There are limits on jewelry. There are limits specifically to computers. Some renter's policies cover cell phones if they get damaged. You want to be very aware of what those limits are, and if you have higher value items, if you have a really nice computer, if you have a $2,000 computer, or if you have a lot of jewelry, you want to contact your insurance agent to make sure that those are insured. So if there's any kind of fire, burglary, anything like that, that you'll be able to get those replaced and not be stuck upriver. Now, homeowners works a lot like renters. There's MedPay, liability, the same limits of coverage. But with homeowners, there is actual cost value and replacement cost value. Actual cost value it takes in depreciation. So if you get something and it ages, they reduce the value of that item by the age. Whereas replacement cost value will replace it with something that is of like kind and quality to whenever you purchased it new. That's very important with a lot of policies with a lot of homes, because you start talking about roofs, and roofs depreciate 3 to 5% a year. After 20 years, you're not getting a lot for a roof replacement. So you want to make sure that the type of policy you have covers it, or that you have savings in your bank account to mitigate that sort of loss. Now, for property coverage in both renters and homeowners, to try to figure out what the value of everything you have is, you want to mentally take an image of your house or your apartment and turn it upside down. Everything that falls to the ceiling is what you want to account for whenever you insure. So be prepared for that should something drastic happen. It's also not a bad idea to have a spreadsheet of everything you own. Go one room a month and make sure to categorize everything, because in the event of a catastrophe, a total loss of sorts, you want to make sure that you're replaced, that you get reimbursed for everything that you paid for, everything that you own. And the insurance companies will most likely require lists of that. In the event of a fire or something like that, it's better to already have that list instead of having to go through the trauma of building it in addition to experiencing a major loss. Now, there's also valuable personal property policies. Those are the policies for items that are more expensive than a standard homeowners or renter policy covers. They're regularly known as riders, and I would definitely bring it up with your agent if you have anything of value beyond what your policy lists. If you wonder what your policy does list, you can pull out what's called your declarations page. You can call your insurance agent and ask for that, and just ask for your limits of coverage, and they'll be happy to go over it with you. Now, let's talk about life and health insurance. Life insurance is very important. Life insurance is what pays for your funeral. It's what pays for a lot of things. If you were to suddenly pass, what would your spouse and children do? What would your family do? How would your funeral be paid for? You want to be very aware of that. There are two types of life insurance. There's term life and there's whole life. Term life is the easiest to understand, has the lowest prices. It covers you for a fixed period, 10, 20, 30 years, and you can get a lot of quotes online. At the end of those periods, you would need to renew and you would go from there. Whereas there's also whole life insurance. It's more complex and it's more expensive, but it offers additional benefits. Whole life is most well known, and it covers you from the time you start until you die. It also provides a cash value account that you get tapped for funds if you need them later in life. A whole life insurance plan is more of an investment, whereas a term life insurance is an emergency policy. It's really good to have life insurance because dealing with somebody passing without having any sort of financial help is hard. It also provides additional finances for your heirs or for your children or spouse to continue living on one income should something happen. Now, there's also health insurance. With health insurance, it's pretty standard. If you don't have health insurance, once a year you can go to healthcare.gov for affordable policies. Now, with health insurance, you want to think about the deductible, which is how much you have to pay out of pocket for treatments in a year, and copay, which is how much you would need to pay per doctor's visit. Those are the two really important terms for health insurance. Most people's health insurance is through their provider. There's a specific type of policy right now that is that's considered a really high deductible policy and is considered for only especially hazardous use, right? So really grievous injuries. We generally frown upon having those kinds of policies because if you were to suddenly get ill and experience a severe illness, you likely would have to go out of pocket so much that you'd be financially ruined. So if you don't have health insurance, make sure to go to healthcare.gov during annual enrollment periods or look through your employer. Now, if you are suddenly unemployed or if your coverage is kicked off or if you have a baby or if you get married, you can generally enroll in new policies. Those are known as qualifying life events. So if you don't have insurance now, but you have a wedding coming up, something of that nature, good news, there will be a qualifying life event. Generally, you have a fixed time limit after a qualifying life event to get insurance. So please make sure you're quick on it because health insurance is very important to maintaining your financial stability should you get ill. Now, if you ever do have any financial questions, any issues, please feel free to contact us at the Financial Empowerment Center. We're part of the Greenville Human Relations Commission. The Human Relations Commission offers a series of services to citizens of Greenville County. We offer reverse mortgage counseling, foreclosure prevention counseling, landlord and tenant disputes, fair housing discrimination issues, home buyer education courses, rapid rehousing for those experiencing homelessness. We're available in your community. Feel free to contact us. Now, if you do have any questions or would like to set an appointment with the Financial Empowerment Center, please feel free to call us at 864-467-7503, or you can set up an appointment at www.greenvillefec.com. My name is James. I'm with the Greenville Financial Empowerment Center, also part of the Greenville County Library System. Thank you very much. Have a nice day.